Welcome, everybody, to my home office studio of Wilkins Wealth Management Group. Greatly appreciate you joining in again. I hope you're doing well. Today, we've got another stimulus check update. I don't know if you've been paying attention, but it has been an absolute roller coaster over the past week of what's been going on. It's like I've needed this on, trying to catch my breath from the standpoint of being in turbulence and stuff in an airplane. My goodness, been a little bit nuts, but we're definitely going to talk about that. What's going on currently, get you caught up, and tell you what's going on. Additionally, let me back this up, show you about, back it up here so you can see it. On the bottom, election prediction charts you've got to see. So all this stuff going on with the stimulus check, stimulus package, if it gets out before the election or not, but we've got some really good charts I believe you got to take a look at. It talks about election predictions and so forth, looking at the past, what's going on now. And at the very end, we're definitely going to talk about some 3 different scenarios that could play out with the election and how that might look. And then you're going to see some really interesting numbers when it comes to Republican president versus Democrat, split Congress, when either the Democrat president or Republican president. It's very fascinating information that I think you got to take a look at when you're looking out there. So anyway, if this is your first time here, thank you tons for joining on. Greatly appreciate it. If you're a subscriber and a client, again, thank you for your trust to help you guys out and bring you information. Because, I mean, the reason I do these podcasts, really, I am striving to find the best ideas, best time-saving ideas, best financial ideas, striving to find you that piece of information that'll hopefully help you pursue the lifestyle that you desire a lot sooner than later. And if you're already there, I'll help you preserve it, right? Strive to help you do that. So greatly appreciate it. And if I got to back this up, hold on a second. I got to bring out my pointer. So last time it was the big pencil pointer. This time I got to bring out my UD Flyer pencil, or my pointer. So my flyers unfortunately fell a little bit short in the getting into the tournament because of COVID-19. We thought we had a chance maybe to run the table. I don't know, but we'll just leave it where it is. We'll see what happens. But anyway, if this is your first time here, please give us a subscribe if you like what you're seeing, obviously. If you're not, then obviously don't subscribe. And also, if you like the videos, please, if you can, give us a thumbs up. Hit that like button as many times as you can. I think it's only once, but if you can hit them on each of the videos you watch, if you like them, that would be greatly appreciated. Supposedly, it helps us get these videos out to more people on YouTube. But anyway, let's get to why you came. So again, I don't know if you've seen what's going on with the stimulus check negotiation, but it is all over the place. But let me just show you where we ended up. So when we came back into port, if you will, this is what's going on. So on October 1st, the House passed their new bill, which is run by Nancy Pelosi, Speaker of the House, has got a Democrat majority. $2.2 trillion is what they got down to. So they were at 3, they came down to 2.4, now they're at 2.2. And then this week, since President Trump has gotten back out of the hospital, he was hearing supposedly phone calls that were being negotiated. Senator Mitch McConnell, along with Treasury Secretary Steven Mnuchin, Nancy Pelosi, that things weren't going to happen. I don't know, whatever. But bottom line is he called it off. He's like, we don't want to negotiate anymore. And I'm paraphrasing here, but until after the election. So they were deciding they just wanted to focus on working on nominating Judge Barrett and stuff like that. So then literally the next day, Trump came back and made a proposal of different pieces they want to get done. Here's what we want to get done. We don't want extra fluff in the bills and stuff like that. Let's just try to get this approved to get the money to the people that need it, right? So that happened. And then the Senate actually came back and officially, or via the White House / Senate, came back and offered, which you see up at the top here, $1.8 trillion. They were at $1.6 trillion before. So now we are $400 billion apart, which they have not really released on that $1.8 trillion what came up as far as the amounts, what areas of funding, because what has not changed from my understanding is still the $1,200 stimulus check to go out to people that are single. If you're filing jointly, it's $2,400. And then there's also a $500 dependent check for any dependent children. It could be adult dependent, minor or whatever in there. So I have not seen any increases for that. AGI numbers have still stayed the same from what I've seen. So if you're single, $75,000 and under, head of household, $112,500, and $150,000 joint, that or under, is my understanding, has not changed. You will still get a stimulus check. Now, once it goes over those numbers, it starts to phase out where completely you don't get a check if you're at $99,000 or above for single, $146,500 for head of household, and then $198,000 above. There's no check for that, for joint. Still have not seen or heard any change on the enhanced unemployment benefits, still at $400 on the Senate side, and then $600 for the House side. The differences there still being that I have not heard changed, or is how long it would last, where the Senate side says through January or through the end of December, and then the House side through the end of January is the number I've seen. But I still think there's a sticking point is on these last two down here, which is the $250 billion for state and local, and then $417 billion by the House, and then schools $150 to $200. So the biggest gap that I would see still, unless this has changed, I've not seen it, is this how much for the states. And I talked about that on my last podcast as far as what differences were driving that in that scenario. So that was things, and then you had still, which I think they're coming closer on this page, is the airline and the restaurants. I think the airline bailouts, because they're laying off people, starting to, from what I'm hearing. And then at the top is the $60 billion, which to me, very important for homeowner and renter eviction protections. So again, we don't have any updates on how much that increase of $200 billion on the Senate side is providing. And then the other things down here below, federal student loan payments deferred through 2021, that was put in by the House side. And if you haven't seen my video on the $50,000 proposal of student loan forgiveness, federal student loan debt, I'll try and link a little thing up here that you can check that out later too, or just go to my YouTube page, which is over here again, and it's, if you get back in there, I'll cut to this. But I've got videos that I've been putting in here, but that $50,000 student loan debt proposal is in here. You can take a look at that as well. There's a nice one in here too. If you haven't seen this, is Verizon Up. If you use Verizon, you got to watch this. Potentially worth thousands of savings in here. But let's go back to the stimulus package. So still money coming in for paycheck payroll program for the businesses, small businesses and everything, employee tax credits, money for also women and children under the SNAP program. That's not here. I think it was on the last page. But so still don't have an official, but we're getting closer. I heard Larry Kudlow talking today, who's the chief economist for President Trump. He seemed pretty upbeat. I mean, so more than normal. And he talked about, getting a deal done where the asking price at $2.2 trillion. Now you got a bid at 1.8. Hopefully we come in there in between that. I've always said I thought the thing would get done around $2 trillion. So we'll see what happens on that. All right. So now that is the update on the stimulus. If you don't want to stick around for this next stuff, you can jump off now. But we're going to talk about now is this election prediction chart you've got to see. I'm going to bring these up so you can see this. So this is research stuff, could impact your financial planning as well. Obviously, the stimulus checks and all the programs here are huge. That's the main thing. But if you do have investments going on, you're wondering what's going to happen with elections and stuff like that and potential impacts, that's what I'm going to talk about now. So let me come back to my main screen here so we can start pulling some of this up. So the first thing I want to show you, this is extremely interesting because a lot of people are wondering what would happen if President Joe Biden gets in on the, wins the election versus Trump. And historically speaking, what does it look like? Let me get myself off the board here so you can see this full chart. But this is talking about a historically split Congress, which was positive for stocks as well. So if you've got, next, let me back up one. This is not the first chart I want to show you. It's actually up here on top. Here we go. This is the one I want to show you. So this is very interesting. So this on the left side is a Democrat president taking office. And then on the right side is a Republican president. And then you've got, if it's democratically controlled Congress, so you've got it what they call the blue wave, or in the other case it'd be a red wave. But right here they're showing green. But normally the Republican is represented by the red color. But anyway, Democrat versus Republican controlled Congress if a Democrat is president, or if you have a split scenario of Congress as well. And this goes all the way back to 1950 and tracking the S&P 500 index, which you'll see the disclaimers and stuff we got to put down here about the index. But basically, originally the S&P 500 was about 90 stocks. Most people don't know this, but then in the 1950s it changed to 500 stocks. So this is going back to the 1950s. Looks at, if you really take a hard look at this, a split Congress has typically been the best, except for here the Democratic was up 18.3% if you had a Democratic president and a Republican Congress. But if you had a split, it was 15.9. But if you look over here when it's a Republican president, a split Congress is better. Historically speaking, at 17.9%, which to me is definitely fascinating on here that you can see this. So very interesting. So people are talking about what if President Trump loses, Vice President Democratic President candidate wins Joe Biden, then what's going to happen? On here. So we're going to actually go in more detail on this, but this is just a history of Democrats versus Republican and congressional makeups, because if you've got, and the importance of that is usually if you've got a split Congress, it's very hard to get things passed, right? Because right now, look at this, the stimulus bill is extremely hard to get passed because you got the Democratic side, Republican side in Congress, they're going at it, not getting it done. But typically that's a check and balance, as you can see on these charts here, that the markets historically have done well in that kind of scenario when it's split situation. But let me pull back and I want to show you, it was my other chart in here that I want to get into. Let's go into here. Yes, so this is another one. All right, so this is who stocks who can predict that will win in November. So this is extremely interesting as well. If you look at the incumbent party, so it's looking at who's the current president as far as 3 months prior to the election, what historically has happened. So it's basically saying if you've got a strong 3 months of the stock market prior to the election, that we've seen the incumbent win virtually almost every time. So when you have a strong 3 months prior, and right now it was looking down, but now we're back up where it has been a pretty strong third quarter coming in here prior to the election situation. So now you've got this over here showing only 3 times where this stock market prediction was incorrect, which is very interesting on that as well. So now I want to bring in our analysts who have talked about this, and we're going to listen to them talk a little bit about things. I'll make some comments on this. And actually, before I do that, I want to show you one other thing here on charts for October, since we're in October, because that historically has been known as the crazy month being down. So let's take a look at this chart real quick. So this is October has been strong lately, but usually weak during election years. So election year is in green, past 10 years is in black, and then the past 20 years is in the yellow/gold, and then since 1950. So October, usually during election years, the market is down about, not huge, but anywhere from 0 to 2% in there. But the past 10 years, it's been up about 2.5% during the month of October. So usually you see some downside in October. We were starting to see that, but now we're starting to see that pull back up. But usually the next November, December has been really, really strong in the marketplace if you get a smooth transition. But that's what we're going to talk about now. What if we don't get a smooth transition? So let me pull up, and I'm going to get myself out of the way here a little bit, our analyst, so you can see this. I'm going to change myself to the other side of the screen over here. So this is a group of our research analysts. They come out and they have a Market Signals podcast, get it all out to us, and let me put this up on a big screen here so you can see the whole thing. But let's listen to them talk a little bit about some key points with the election coming up, what themes they see if Biden wins versus President Trump, and let's listen in on this.
Now talk about if we'll start with Joe Biden. If Joe Biden wins, if President Trump wins, and then if there's kind of a chaos potential situation. So, here are some on the screen on YouTube. We are sharing some of the potential things that we see. So Joe Biden, Jeff, too many J's out here. I don't know. I've been talking a lot this morning so far. Jeff, if Joe Biden were to take the White House, you mentioned policy. I mean, you were talking about that earlier. What are some of the big policy shifts that we could see? And we're aware, it probably depends on if we get the blue wave or not, but just big picture, what are some of the things you're on the lookout for here?
Taxes is the big one, Ryan. We could see one of the biggest tax increases in history. The Biden plan is about $4 trillion, but I was actually on a call with Jason Furman the other day, the former economic advisor to President Obama. He actually thinks we might get less of a tax increase, maybe something more like $2.5 trillion. In fact, the corporate rate, most people think Biden will get 28%. If you have the Democratic sweep, could be less than that potentially. Again, if we still have the filibuster. So I think that's really interesting. The other point I want to make on taxes, and we're not just talking about higher corporate rates. We're talking about capital gains, dividends, or regular income taxes on incomes above $400,000. So this would be a huge wave of tax increases. But I think what's important for investors to realize is that while if you do the math and you take 10% out of earnings, of course that should hurt stocks, even though maybe a little bit of that risk is priced in. But there's an offset to that, and that's in terms of more spending, right? A lot of those tax dollars are going to go into green energy products, going to help go into infrastructure projects, and there will be revenue for S&P 500 companies attached to that. So we would caution folks who may just want to take 10% out of the stock market overnight, just based on the tax increases alone. And of course, it's the Senate really holds the key. So even if you think Biden right now is the favorite, you really have to look at that Senate race to be able to factor in these tax increases.
Exactly. On YouTube, we are sharing the chart that this year's earnings are supposed to be 132 on the S&P. Next year, 162. If the Joe Biden tax increases take place, it goes down, I'll say down, to 146. but you could have a removal of the Chinese tariffs, right? And if you have the removal of Chinese tariffs, earnings are 154. A lot of numbers there. But again, to think that just because there's higher taxes coming, what is the stock market like? We've seen for 10 years what the stock market likes. Spending, right? President Trump likes to spend. Joe Biden likes to spend. Both parties apparently like to spend anymore. So I think that's something that's really, really important to note. Now, I want to bring Barry back in. Barry, so that was kind of the policy side of things. From an investment.
All right. So real quick there to make a comment is that one thing they didn't bring up, which I want to add in here, is the fact that also Joe Biden is projecting that they're going to also impact real estate depreciation. They want to take that off the board. They also want to take off 1031 exchanges. So if you're not familiar with that, if you have a property or that you sell that's not your own personal property and you exchange it for a like-kind property, you can actually sell that in most circumstances without any capital gains tax. But they want to take that away as well. And they also want to eliminate loss pass-throughs for things as well coming through on a real estate deals. And then there's also taxes potentially being impacted indirectly on small business owners making over $400,000. It's called the qualified business income deduction, where that's like a 20% income deduction that's available out there to small business owners, which basically, if you look at stats and everything, they're one of the most employer friendly / employee bringing on new employees in the country. That's the bread and butter a lot, are these small employers that will bring on new employees and so forth. So if they're starting to take away that kind of stuff too, that can also have an impact on it. But all in all, general, they're looking at all these numbers that you saw before, talking about a tax increase that Joe Biden is planning on doing, or he wants to get doing, but it has to get through the House and the Senate. So when you're going to have to see a situation with the House and the Senate, you get a blue wave to possibly get all that through or not. If you don't, you got to split Congress. That's when I was showing you those charts before. Still may not be that big a deal, but we'll let them continue on here and talk, and I'll get out of the way.
Investment's point of view. Now, I know this is the book. I always like to point this out. When President Trump won, the book said financials would do well, energy do well, steel, coal would do well, and tech would do poorly. Well, the exact opposites happened for 4 years. So just take this with a grain of salt. But Barry, in theory, if Joe Biden wins, which sectors do you think investors should be maybe sniffing around a little bit more?
Yeah, we have the highlights here. I think one of the keys you said, markets like spending. President Trump has talked about an infrastructure bill, but and it's something that I think he wants to get done, but it's not as high a priority. It's not something that he has pursued very strongly. We think that the infrastructure bill would be a higher priority, so we'd actually see that get done, and we would expect sectors that are exposed to that type of bill to do better, which does include some of those cyclical sectors. Renewable energy, even that ties into the infrastructure bill because there's a green emphasis in Biden's version of the bill. We've already seen movement around renewable energy just with changing election expectations. It's been kind of a barometer of how we're doing. A little bit more open with trade. We expect a lot of the policies with China would continue, but maybe the manner of negotiating around those policies would be a little bit different. So probably more of an emphasis on free trade, and we've put in some of the other key factors there as well.
Yes, exactly. So, let's wrap things up on the Democratic side of things. I mean, could there really be a blue wave? We're going to show now that, believe me, anything's possible. It's 2020, and that's the way the polls are showing. But the potential concern we've had at LPO Research is if there's a blue wave, if there's higher taxes, like Jeff said, should I just sell? Should I get out? I mean, don't forget, when we had, I guess, call it the red wave, when the Republicans won in 2016 with the red wave, what happened? Right, there were concerns about too much, concerns about President Trump policies and what negatives it could have. S&P went up 15 months in a row, the all-time record. Now, on YouTube, we're showing right now, After previous times you've had a blue wave, that's again a Democratic president with both chambers of the House. You know what's happened? Stocks tend to do really, really well. They've been higher every single time. It's 1, 2, 3, 4, 5, 6, 7 times in a row back to Jimmy Carter, the last time the S&P was lower when you had a blue wave. So every time is different. This is a 100-year pandemic, and there are lots of scenarios. We understand that. But to just blindly say, I'm going to sell my stocks because of the blue wave or because I don't like President Trump, either way, a lot of people did that for 8 years under President Obama, went into gold. That didn't work so well. 4 years with President Trump, we've had almost 150 new highs on the S&P. And honestly, as we speak, the S&P is not that far from an all-time high again. So a lot of people might have missed those gains. It's important to separate, I guess, your election vote from your investments. I know that's very difficult to do, but I think we've stressed that time and time again on market signals. I want to just do that one more time. So Jeff, let's bring you back in. What happens, you think, how about this? How about, Jeff, you do the investment side of thing, and maybe Barry will do the policy. We'll flip it up. So from an investments point of view, what do you see happening potentially if President Trump were to retake the White House here in a couple of weeks, Jeff?
Yeah, I mean, history suggests that incumbent victories are better for the stock market. There's more policy uncertainty. You continue the policies that have been put in place over the prior 4 years. Stocks, as I mentioned, are good predictors of election outcomes. We're actually up about 3 points on the S&P 500 since the start of August. Right. That 3-month period, August, September, October, is the key predictor of election outcomes. So that's a point in favor of President Trump. Obviously, we still got another 4 weeks or so to go, so we can't necessarily put that in the Trump column just yet. But certainly if Trump wins, the certainty around the outcome and the continuity around the policy would likely be good for stocks. But that doesn't mean that stocks can't go up in a Biden win scenario. You've got history tells you, right, that stocks go up no matter who wins. 6 and 12 months post-election in any scenario, stocks are up even more than they are in a random 6 or 12 month period. Over 80% of the time you've had gains over those periods, and a lot of them have been pretty strong. To underscore Ryan's point, right, we're not going to sell stocks because of the election. Might take the other approach and buy a dip. If election uncertainty causes more volatility here in the near term, we would view that most likely as a buying opportunity based on what we know now. Tron, you just mentioned, Ryan, it's tough to pick sectors and asset classes based on the election. Energy in particular is tough, right, because more production can bring prices down. I would say healthcare and financials probably the most sensitive. Financials probably would applaud a Trump win. And on the healthcare front, it really depends on, as almost everything does, on what happens in the Senate. But whether we get an expansion of the ACA potentially, or we get a public option to compete with for-profit private health insurers, that is a big question. If you get a Trump win, that should be good for healthcare, taking away that uncertainty. And then last point on healthcare, prescription drug prices are probably going to be regulated lower here no matter who wins. So that's on the margin negative for pharma companies, but that really has been out there and well known for quite some time.
Good points there. You mentioned, potential clues. I mean, solar stocks have really been strong. Again, that's potentially a Joe Biden market sniffing around a Joe Biden potential victory. And it's almost like technology. Everybody wants to talk about technology. Tech's done well under President Trump. We've seen that for 4 years now. I think it probably would have done better under Hillary Clinton as well. Nonetheless, maybe you could say tech is, it's less bad for tech if President Trump were to win, given some of the things we just talked about earlier, potentially with a blue wave and Joe Biden. Now, Barry, I'm going to go to you in a second. I just want to build on what Jeff said. Stocks predicting the election. I mean, we've talked about this before, but if you look at the S&P 3 months before the election, and if it's up, the incumbent party wins. If it's down, the incumbent party loses. Kind of simple. Sometimes simple is kind of the way to go. And sure enough, 20 of 23 times stock market's been right. And as Jeff just mentioned, if you start the clock from August 3rd until about the time we're recording this, S&P is up 3%. Big gains in August, big sell-off in September. So far, October has lived up to the volatility. There's a long way to go there. But, again, that's just something to be aware of, that kind of how.
And as I mentioned before, this is the chart I showed you earlier. That index is even up a little bit more since they're talking about this. So definitely a interesting chart to looking forward at incumbents winning or not. So let's listen further here.
Stocks are doing the next couple of weeks maybe is one clue that if President Trump were to lose, you'd see more of a sell-off in stocks. If he were to win, maybe a little bit more strength. And again, it's never that simple, but still, it has a pretty decent-sized track record. And we're going to get into some other charts that we see that do favor Joe Biden, but at least right now, you have to say equities potentially favor a potential President Trump win, or maybe not even President Trump win, just a much, much closer election than what some of the polls are telling us. So Barry, back to you now. Under a President Trump win on policy, and we kind of know his policies, maybe not a ton of new stuff here, but any new policy you can expect from President Trump here?
New in the sense of more, not new in the sense of different. There will continue to be a policy push. We've seen President Trump's priorities for the last 4 years. We're going to see a push in the same direction. Additional deregulation, probably areas where there will be a push to further decrease taxes. The trade emphasis that he has will probably continue. An emphasis on I think what he would call free but fair trade, but from traditional standards, less of an emphasis on free trades. The pressure on China will probably ramp up. So more of the same, not new policies, but an extension of the policies that he's already introduced.
Good stuff there. Makes sense. Let's kind of go through. Now we'll kind of finish things up with what we'll call maybe a few of our favorite charts, or kind of the more popular charts that we've shared. Jeff, tell me a little bit about, if the stock market's saying potentially the race will be closer than we think, with the strength saying maybe the President Trump's closer to potentially a victory, at least keeping it close. What's the economy tell us historically and kind of right now with the election, you think? Yeah,
the famous James Carville quote, right? It's the economy stupid. When you have a recession right before the election, incumbents tend to lose. That's happened. You can make a case that that's happened every election for 100 years with every recession, because the Coolidge election was, he took over for a recession that was already kind of in the books. So that is a very powerful indicator of elections. That would, of course, favor Joe Biden here. But what makes that makes me hesitate a little bit on that is because we're going to have such strong economic momentum going into the election. I mean, we could have a 30% GDP print, best quarterly GDP print ever. And certainly we've had, significant job gains coming off, the trough of the recession in March, April. So we wouldn't, strongly put that in the Biden column, given the momentum, but certainly the fact that we just came out of recession tends to favor Biden looking at history.
Yeah, no, absolutely. So Barry, if you look at approval ratings, President Trump's approval ratings have been low since the debate last week. They've dripped a little bit lower. I guess this is kind of fairly simple, but on YouTube we share it. When you have low approval ratings like Bush 1 and Carter did, they did not get much of the vote, whereas Johnson, Reagan, Nixon all had fairly high approval ratings. And if you look at the two-party vote, they took a lot of the two-party votes. So this one favors Joe Biden. You want to build on kind of approval ratings and why they matter here?
Yeah, clearly, if you have a better approval rating, it means that the job that you're doing has higher approval, and people would want to see it continue. And historically, higher approval, bigger share of the vote, and the other way around. This one tilts towards Joe Biden, but it's actually pretty close right now. It's under that 50% mark, but you throw in the impact of the Electoral College, which we know favors President Trump, and it actually might mean that things are a lot closer, but President Trump's approval rating is certainly not supportive right now.
Absolutely. I'll chime in on the U.S. dollar just quickly. Then, Jeff, I'll go to you and we'll kind of wrap things up. Similar to the discussion we just had about stocks. If stocks are up, it favors the incumbent party. If stocks are down, it favors potentially new leadership in the White House. Well, the U.S. dollar is somewhat similar to that. And you think about March, the U.S. dollar was really strong. Okay, gold got killed. Stocks got killed, bonds got killed in March. Everything was down except the U.S. dollar. It's the ultimate risk-off trade. Almost like there's some monster under the bed, there's some uncertainty, there's something coming we don't know, so let's go to the dollar because we feel safe. Historically, that's exactly how things have played out. It's, let's see, 1, 2, 3, 4, 5, 6, 7, 8. 7 of the last 8 elections that we had, the U.S. dollar predicted them. What I mean by that, again, if the dollar's up, you tend to see a new person in the White House or a new party in the White House. If the dollar's down, things are calm, things are normal, you tend to have that party win. Now, the dollar is virtually flat, just to make this more fun, from where it was back on August 3rd. So we had, a strength in the dollar. Dollar sold off a little bit lately. So again, this is just one of those other things maybe to pay some attention to if we get some major moves in the currency markets that might give a clue. Also, copper. Now, this is for this year, but remember in 2016, copper had a record 14-day win streak directly ahead of that election in 2016, like directly ahead of it. That was a infrastructure President Trump potential play. I mean, I didn't notice at the time, I'll be very honest, but after the fact I did. So copper sniffed it out. The stock market had a 9-day losing streak ahead of that election. The Dow did, one of the longest losing streaks ever. Now, there weren't huge losses, but down 9 in a row is down 9 in a row. And again, so the markets were saying maybe there's a much better chance for President Trump than everyone was given thought at the time. And again, as we get closer, follow the dollar, follow these things, keep coming to market signals every single week. Believe me, we will be talking a lot about these different signals. And who knows, might be some new ones that we dust off before long. So, Jeff, let's kind of wrap things up. Higher income, people making more money, that tends to mean they vote in the guy who's in there. Again, I don't think this is rocket science. Apparently, if you look at, let's see, your higher real per capita disposable income, it's up 7% this year, one of the largest we've ever seen. Tell me why there's probably an asterisk next to that. But also, what do you think? It might favor President Trump a little bit. What do you think?
Yeah, this one's really tricky because it's stimulus driven, right? Mm-hmm. We had income replacement from supplemental jobless benefits, et cetera. So you had this huge boost to incomes. It certainly helped retail sales get back to their pre-pandemic levels. But stimulus started to fade last month, and it's probably going to continue to fade because, as we're seeing in the news, we're unlikely to get stimulus before the election. And even if you get agreement on a framework on stimulus, you're probably not going to have those checks hit people's balance sheets or bank accounts in time. So, this one favors Trump now based on the latest numbers we have, but it's probably going to reverse here, with the next couple of months of data. So we'll just have to see. It's really, this one could go either way. You don't like to say this time is different, but with regard to this one, this time is definitely different.
Yeah, Sir John Templeton, the 4 most dangerous words in investing. This time is different. This isn't quite investing, but nonetheless, it really is different. All right, so let's make predictions. Who's going to win? I'm teasing. We're not going to go there. Here's my prediction. I think Joe Burrow is going to set some records for passing and touchdowns as a rookie. I'm a Bengals fan. I'm fully aware, but I think he's the real deal if we can keep him up, right? So that's my prediction. Jeff, your prediction on the Chiefs.
All right, I'm going to stop there. Had to let the Bengals thing throw in since we're from the Cincinnati area. I'm in agreement with Joe Burrow, that's for sure. But we are going to talk about some potential outcomes here that they're not going into that I wanted to bring up. So let me get out of this real quick and find here what I wanted to show you. So we really think that there's probably 3 scenarios. This is what our research group has written about that could play out here and what might happen. Because what's very interesting, because we're talking about how close the election could be, even though we're seeing some national polls with Joe Biden supposedly double-digit, stuff like that. But people do point out back in 2016 when Trump was trailing 2, then he ended up, winning, obviously, and so forth. But over the last 5 presidential elections, the difference between the 2 candidates in the popular vote was less than 5%, 4 times. And in two of those cases, the winner in the Electoral College had lost the popular vote, which is the same with President Trump was as well. But what people are looking at is, and I don't know if you watched the debate between Vice President Pence and Kamala Harris, is that they were talking about, and it's really been the question asked, about a peaceful transfer of power. If you don't win the election up front, you don't see that. And if you go back to 2000 and looking at, I'm going to pull this down here as far as the election periods and so forth. 2000, we had Al Gore going against George Bush, right? And we had the hanging chads and all that stuff, and it got dragged out, which actually happened to be the case. The Supreme Court ended up deciding that. And then you had what happened was the trading days before and after the elections, the market actually went down about 8% after the election. There was also a situation back in 1960s presidential election as well. So there's the concerns that, you got all these new mail-in voting, which typically 60%, like I think in 2016, 60% of the people voted in person. You still had the other 40% were mail-in and absentee ballots. So that part's not new. I just think there's going to be a bigger wave based on what we're hearing or what I'm hearing and so forth, which could potentially draw a delay in the winner, or potentially, if people don't agree with things on either sides, that they could contest that. So that is scenario one, is delays due to the time it takes to count the votes. So typically that would be a very, and what our research group is saying, that'd be a very negligible impact on the markets based on that. However, there could be a degree of voter anxiety that, companies that political pressure to expedite the counting process and stuff like that, that they note in here as well. But scenario two, you get into vote recount. So this is where there's close election or charges of fraud, closely contested states, legal challenges that can arise, lead to heightened political tensions. In this scenario is where the broad equity indexes could decline, maybe, and our research group is saying 5 to 10%, largely due to the perception of some of the risk of a more serious escalation. Now, they are saying here they don't believe the market dip, or we believe a post-election market dip would likely prove viable as disputes move toward resolution via established institutions and so forth. So that's, you get a little bit of dip there, like a typical correction, but nothing like dramatic as well. Because like the election in 1960, I was showing another chart, was contested with legal challenges in several states, but there wasn't a strong enough to rattle the markets at that point in time. But we did have about an 8% drop in 2000. But if you get to scenario three, which is a disruptive legal or legislative battle, which could take this drawn out into January, because there's two key important dates. And this is December 14th. Is two dates that mark the key lines and calendar for resolution election results. Electors of the U.S. Electoral College will meet December 14th in their respective state capitals to formally cast their votes. And then on January 6th, you've got 2021, the Senate and the House will convene to count the electoral votes. Any uncertainty at those points, would almost certainly create a legally contested situation going to the Supreme Court. In 2000, the Democratic Party and Gore pursued the legal processes like I talked about. However, they were resolved in a pretty timely fashion, and the electorals casting their votes, and there was a pretty smooth transition. There was no issues. But obviously, you see tweets and stuff out there about, voter or mail-in fraud stuff and all this. And if that heightens, potential scenarios where you get this drawn out debates and stuff, that could be a scenario where you might see the market drop in excess of 10%. They didn't say anything specifically, 10, 20%, uneasiness there. So what does that mean? So if you are in a situation like when we are managing assets for people, let me come back to my main screen up here. But when that's a little big there. Let's go to a smaller one. Anyway, when we're managing assets for clients, especially folks that are in that getting ready to retire or retired, we believe in setting up what we call a bucket strategy, where you have your first 2 to 3 buckets as more conservative money that typically are set up to last or utilize up over the, say, 15, 17 years of retirement. It's more conservative. And then we have money that's what we call our index protected type bucket strategies, regular indexing and stuff. And then we have what we call our treasure hunting bucket, if you will, where we're trying to outperform the markets. But that money you're not going to really touch, even in retirement, for 17 years plus. So, and I'll show charts on another podcast about market timing. We're not big market timers for sure, because there's clearly charts that show how you missed just even the best 5, 10, 15, 30 days of an upswing and you're out of the market, how big of an impact it can have on your portfolio over a longer period of time. But this could be an issue. I mean, just with all the stuff coming up, that if we do have a delayed presidential, winner announced and there's more legal battles and stuff like that, if you've got cash you've had sitting on the sidelines, or there's money you might need in the next, couple years or something like that, you've been still getting into the stock market. Again, I don't know your situation. I encourage you to contact us to give you a complimentary consultation on it. Talk to your advisors, but it could be an opportunity where you're leaving money in cash that maybe you've been thinking about putting in the market, just to see what happens here right after the election, or maybe taking some off the table prior to that for money that you might need. Now, if this is money getting, it's like 17, 20 years, you're younger or in retirement, you got money all set aside for your safe stuff. In that case, we're saying we still believe long-term in the innovation and the ability of human beings to adapt, new ideas, long-term, growth of equities. No guarantees, obviously, but we believe in that path. So that is what I wanted to go over today in today's podcast. I greatly appreciate you joining on. I hope you have a fantastic rest of your day, evening, whatever it may be. And from our families to yours, have a blessed rest of your day or evening. And I'll see you on the next podcast, hopefully. Thank you very much.
Too many days in the darkness without a glimpse of the light. Running tired and broken and scared, but I swear I'll never give up.